GM, everyone, and welcome back to Unwrapped.
Good to be back.
Love the GM shirt, by the way. Really spreading that base positivity. Looks great.
Thanks. Thought it was fitting, Okay, first things first. Just a quick reminder that nothing we chat about here is financial advice. We're just explaining the tech, how it works.
Think of it like looking under the hood, seeing the engine. We want you to really get what we're building.
Absolutely.
So if you joined us last time, we did our initial look at wBLT. That's the wrapped BMX Liquidity Token.
Right, and we covered how it's that vault token you receive for depositing BLT and how it automatically compounds the protocol fees.
It's actively working, actively earning stuff.
Exactly. It's not just sitting there. It's dynamic, designed to grow as the BMX protocol itself generates fees from activity on base. It's kind of like your slice of the pie.
Right. Okay, so that was part one, the basics. Today, we're really getting into the why. Why do people see wBLT as, well, a premier asset on base?
Mm-hmm. We want to unpack its actual performance, look at how efficient it is with capital, and its wider role, its significance within the whole base ecosystem. The goal today is really to show the tangible benefits, the real-world impact, and maybe look ahead a bit, go beyond just the mechanics.
Okay, let's jump in. Performance. How's it actually looked? The nitty-gritty.
Well, the efficiency numbers are pretty striking. Think about this.
Mm-hmm.
We had a vault, right? Its total size never went above $5 million.
Okay, relatively modest size in the grand scheme of DeFi.
Right. But that vault, it's already routed over $2 million in protocol fees back to itself.
Wow, okay. From under $5 million TVL. That's substantial.
It really is. And it gets wilder. At one point, we actually tracked 143% annualized fee accrual rate.
143%. Seriously, where did that come from? That sounds almost too good to be true.
Well, it's really important to stress this isn't coming from like some inflationary reward token or a temporary subsidy program.
Okay, good clarification.
This is purely from genuine trading volume happening right here on base. Real activity generating real fees.
That speaks volumes then about the capital efficiency, doesn't it? And the organic growth that wBLT helps drive within the base community.
Exactly. It's tied directly to the network's health.
Okay, solid performance checks that box. But what about efficiency? We all want our assets working smarter, not just harder.
Right. And this is where it gets quite interesting from a strategy perspective. Holding wBLT, it can give you similar upside potential to just holding ETH or BTC spot positions on base.
How so?
Well, because BLT itself holds ETH and BTC in its basket. So if their prices go up, the value of the underlying BLT in your wBLT should, reflect that movement.
Ah, okay. So you get exposure to their potential gains.
Exactly. But, and this is the big advantage, you also get that continuous stream of fees flowing in on top.
Right, the fees we just talked about.
Precisely. So it's like holding that diversified basket, ETH, BTC, Arrow, USDC. But the basket itself is constantly adding more assets to itself through fees.
Okay, that makes sense. Now, the dreaded impermanent loss question. How does wBLT handle that compared to, say, a standard two-token LP?
Yeah, good question. So wBLT is designed to, let's say, mitigate some of the IL effects. It's not totally gone. We need to be clear about that.
Okay, mitigation, non-elimination. Got it.
Right. Because BLT holds 5 assets, not just 2. A big price swing in just one asset doesn't hit the overall value quite as hard as it would in a simple pool, for example. The diversification helps buffer it.
Makes sense. More assets, less reliance on just one pair's stability.
Exactly.
Now, let's get into the really interesting part you mentioned. The mechanisms based on BLT target weights. How do they help mitigate IL?
Right. This is a neat part of the design. So the BMX platform can actually adjust the fees for minting BLT, creating new BLT by depositing assets, and redeeming BLT, burning BLT to withdraw assets.
Adjust the fees based on what?
Based on the target weights of the assets inside BLT. We have ideal proportions for each asset, like that 52% blue chip, 48% stable split. If the actual holdings drift too far from those targets,
the system tries to nudge them back.
Exactly. Through fee incentives. Let's take an example. Say the price of ETH rockets up, or maybe lots of people deposit ETH. So ETH becomes overrepresented compared to its target weight in BLT.
Okay, too much ETH relative to the plan.
Right. The platform could then increase the fee for depositing more ETH to mint BLT, make it a bit more expensive. But at the same time, it could decrease the fee for redeeming BLT specifically to withdraw ETH.
So making it less attractive to add more ETH and more attractive to take some ETH out.
Precisely. It encourages arbitrage. Traders might see an opportunity,
Mm-hmm.
maybe deposit USDC, which might be under its target weight and has a lower minting fee, and then redeem BLT for that relatively cheaper to withdraw ETH.
And that arbitrage activity itself helps rebalance the pool back towards the target weights.
Yes. And here's the crucial link back to wBLT holders and IL. The fees generated by this arbitrage activity.
They get collected.
They get collected and distributed to the wBLT holders, usually by buying more BLT. So a situation that might just manifest as impermanent loss, this price divergence forcing rebalancing here, the process of incentivized rebalancing actually generates more fees for the people holding wBLT.
Okay, wow. So it's almost flipping a potential negative into a positive fee-generating event for the holders.
That's the idea, yeah. Turning potential rebalancing needs, which are related to IL drivers, into fee opportunities.
That's really clever. So comparing this whole wBLT structure now to just, say, putting ETH and USDC into a standard pool, the difference in potential IL exposure seems pretty significant.
It's fundamentally different.
It really sounds like wBLT uses this multifaceted approach, the diversification, the fee engine, these clever target weight mechanics to really tackle impermanent loss head on for liquidity providers on base.
Absolutely. It's a combination strategy.
Okay, this is connecting a lot of dots. Performance, efficiency. Now, you mentioned something really intriguing before, wBLT as potentially self-repaying collateral. How does that work?
Yeah, let's walk through a scenario. Imagine you take your wBLT and you deposit it into a lending protocol. Let's use Morpho as the example. And you borrow USDC against it.
Okay, standard borrowing. You deposit collateral, you borrow stablecoins, you pay interest.
Right. Normally, you'd just be paying that interest rate on the USDC you borrowed.
Mm-hmm.
But because the wBLT you deposited as collateral is still accruing all those protocol fees we talked about.
It's still growing its underlying BLT amount even while it's locked up.
Exactly. That continuous growth in the BLT, backing your wBLT, effectively starts working against the interest you owe on the USDC loan. It helps chip away at it.
Whoa, hang on. So the collateral itself is productive. It generates value that can counteract the borrowing cost.
Precisely. Your collateral isn't just static security. It's actively growing, potentially reducing your net borrowing cost over time. It's a fundamentally different dynamic than using, say, plain ETH as collateral.
That is genuinely innovative. Your collateral pays you back in a way. Very cool.
It makes it a uniquely capital-efficient form of collateral within the decentralized finance space.
Okay, performance, efficiency, cool borrowing tricks. But how does it fit into the bigger base picture? You said it's becoming like infrastructure.
This is where decentralized exchange aggregators are really important. Think platforms like 0x or Odos. Their whole job is to scan all the liquidity sources on Base to find you the very best price for your swap.
Right. They route your trade wherever the best deal is.
Exactly. And what's happening is these aggregators already see and use the main BLT pool as one of their potential liquidity sources. If routing part of your trade through BLT gives the best overall price, they'll do it automatically.
So someone could be using, I don't know, Matcha or Odos, trying to swap ETH for USDC, and without even knowing it, their trade might hop through the BLT pool.
Precisely. And when that happens, it generates the standard BMX protocol fees,
which then get automatically deposited into the wBLT vault.
You got it. So as a wBLT holder, you are earning fees from trading activity you didn't initiate, maybe didn't even see happen, just because BLT offered the best path for that aggregator.
Just hold the wBLT and you're collecting micro fees from potentially thousands of trades across the entire Base network.
And consider this stat. By 2024, something like 26.5%, over a quarter of all decentralized exchange swap volume on Base was going through aggregators.
A quarter of all volume. That's huge. And wBLT holders are potentially getting a piece of that action via the BLT pool integration.
It shows how deeply embedded BLT liquidity is becoming. It's not just about the BMX front end. It's a foundational layer other protocols are building on or routing through.
Wow. Okay, that really paints a picture of its role. Now, you mentioned history earlier. wBLT wasn't built in a vacuum, right? What came before?
Correct. Before BMX on Base, the team experimented with a similar concept on the Phantom network called wMLP.
wMLP.
Yeah, wrapped MLP. That was really the proof of concept. It showed that, yes, you can build an LP token where the protocol fees are automatically processed and reinvested, increasing the underlying assets per token over time.
So it proved the core mechanism worked.
Exactly. It validated the automated fee compounding idea. When the team came to Base to build BMX, they took those learnings and, frankly, leveled up the design quite a bit for wBLT.
What are the key upgrades from wMLP to wBLT?
Well, wBLT is designed with multi-chain awareness in mind for potential future fee streams, although right now it's focused on Base. It has richer and more diverse fee sources built in compared to the simpler wMLP setup.
And the lending integration we discussed, like with Morpho.
Yes, that deeper integration with other core decentralized finance protocols on Base is a major step up. Plus, getting investment in the BMX token from Coinbase Ventures, that's a pretty strong signal of ecosystem belief in the whole project, including wBLT.
Definitely adds credibility and shows support.
For sure. And while wMLP worked on Phantom, the scale is just different on Base. It creates a much more fertile ground for an asset like wBLT to actually accrue significant fees and demonstrate its value proposition.
Right. Bigger pond, more fish, more fees. Makes sense. Okay, always important, though, the reality check. What are the risks? What should people be aware of?
Absolutely critical. First and foremost, the value of wBLT is still fundamentally linked to the market prices of those 5 assets inside: ETH, BTC, Arrow, USDC.
So if crypto winter hits again,
Exactly.
the ratio can go up, but the dollar value can still go down with the market.
Precisely. You need to understand that. Then there's always smart contract risk. It's decentralized finance. While the BMX code is public and the team has history, no contract is ever 100% guaranteed immune to bugs or exploits. It's a risk you accept.
Standard decentralized finance reality. Okay, good practical points. Market risk, contract risk, liquidity.
Got it. So let's look forward then. What's the future potential here? Where could wBLT go?
Well, the most obvious potential driver is simply more activity on Base. If overall trading volume keeps climbing.
Which it seems to be.
Right. And if aggregators continue routing a good chunk of that through BLT because it offers good pricing, then the fee accrual for wBLT holders should, naturally increase. More activity, more fees flowing into the vaults.
We could definitely see more protocols on Base integrating BLT liquidity. Maybe more lending markets accepting wBLT as collateral beyond Morpho. Perhaps new types of derivatives or structured products built using BLT or wBLT.
Expanding its utility across the ecosystem.
Exactly. And maybe even new fee streams. As the BMX protocol itself evolves, maybe new features are added that generate different kinds of fees, which would also potentially be routed back to benefit BLT and wBLT holders.
Interesting possibilities.
Yeah, but the core principle remains, I think. The long-term success and value will come from real usage, real volume, real fee generation, not just, launching more tokens, but actual economic activity happening on Base and flowing through the system.
Utility and real value accrual. That's the name of the game. Okay, let's try and bring this all together then. What are the key takeaways from this deep dive into the why of wBLT?
Well, we've seen solid real-world performance, right? Significant fee generation on a relatively small vault size driven by organic activity.
Capital efficiency.
Yep. Exposure to key assets like ETH and BTC, plus that constant fee stream on top. And the design aims to lessen IL compared to basic LPs.
Plus the whole dynamic fee thing, helping holders.
Right. And don't forget the self-repaying collateral angle. That's pretty unique.
Definitely. And its integration.
Crucial. Being used by aggregators means it captures value from across the Base network. It's also building on lessons learned from wMLP, but significantly enhanced for Base.
And we covered the risks too: market volatility, contracts, liquidity, balanced view.
Correct. But fundamentally, the story of wBLT is one tied to the health and activity of the Base ecosystem itself. Its growth comes from real fees, real usage, which, fits perfectly with the positive Base vibes we try to share here on Unwrapped.
Absolutely. So maybe a final thought for everyone listening. As Base keeps growing, as decentralized finance keeps evolving, what is the future role of these kinds of productive assets? Assets like wBLT that don't just sit there, but actively accrue value from the network around them. How might that change how you think about capital efficiency in crypto? We really encourage you to keep exploring BMX, keep exploring Base, and see how this all continues to play out. Thanks so much for joining us on Unwrapped today. It's always a pleasure sharing the positive energy and developments happening right here on Base with all of you.